Welcome back to Global Investor. Still with me in studio, Stephen Schultz from Momentum Wealth International. Stephen, before the break, we looked at that graph on future energy demand coming from emerging markets. So you would be bullish in the longer-term prospects. Short-term, though, we have a couple of companies reporting this week, BP, Total, Shell. And I suppose they're going to really tell the picture of where commodities are at the moment and what the oil price has done over the past year.
Absolutely. So I think those companies in particular are particularly compelling for investors. I say that with respect to, I suppose, at the end of the day, one needs to make a call on oil prices. So whether you believe that the current levels are sustainable. Personally, I think that they're somewhat suppressed. I think we've seen a textbook sell-off of commodities, and it's been pretty indiscriminate in terms of which commodities. We've already seen on the supply side some significant changes come through. So according to Baker Hughes, we've seen rig counts in the US shale gas producers go from 2,000 to 900, so it's more than halved in the last 3.5 years. And eventually that supply will get absorbed into the market, and we should see price normalize, in which case I think the likes of a Shell, a BP, a Total would be very well placed to take advantage.
And do you think they reflect current oil prices?
Absolutely.
So you would be benefiting with any uptick in that oil price?
Absolutely. I think we're almost witnessing an anomaly take place in commodity markets. Oil is a good example, in that this is the first time we've seen such a significant sell-off in commodities without there being an accompanying recession globally. So it really is largely off the back of news coming out of China and the supply side, of course.
Yeah. So I mean that's long-term prospects, but I mean buying today if you're a long-term investor. If you're a short-term investor, which sectors would you be looking at the moment, Stephen?
Yeah, so I think short-term is always difficult to call. It's probably easier to approach it by saying which short-term sectors would we like to avoid.
What would you avoid?
By that measure, I think consumer staples, much like South Africa, around the world is particularly expensive. So perhaps one to avoid.
So grocery retailers and the likes.
Correct. On some of the medium term, perhaps if I can venture into medium term, what's exciting would be the typical financials, tech companies. From a valuation perspective, they certainly aren't attractive. But what we are seeing is some pretty decent earnings supporting those valuations. Despite that, we're seeing those prices move roughly in line with the market, so perhaps a medium-term opportunity there. And in the longer term, as I mentioned, commodities and oil companies or globally diversified oil companies are particularly exciting. And with that, I can extend that maybe by saying healthcare is quite an interesting one. Biotech, healthcare services.
Defensive, yeah.
Defensive. And I think there's a great story that goes with it. So if you look at an aging global population, innovation within the pharmaceutical space, and technological advancements certainly support those as interesting investment stories.
So would you be specifically looking at healthcare companies in developed markets where you do have those aging populations, so European, Japanese perhaps, and also the US?
Correct. So I think many of the exciting players are listed in those countries. But I think we are moving into a globalized economy whereby a particular technology which is based, for example, in an emerging market could even have the potential of servicing some of the developed regions.
I mean, would you go with single stocks in the healthcare sector, or would you go with an ETF or a mutual fund or a unit trust?
Yeah, so I suppose it depends on the extent to which you're willing to do your homework. It's obviously a completely different proposition, so it's one that requires a lot of studying of company reports. If you have the appetite for it, I would say that's a pretty decent hobby. If not, I would certainly employ any of the big names that specialize in healthcare. There's several funds that are set up internationally which focus specifically on that investment discipline.
Okay. And along with those oil stocks for the longer term, would you be looking at in the commodity space as well at some of those beaten down mining companies?
Absolutely. I think what's important is to differentiate between mining companies which are globally diversified and are supported by a robust balance sheet. So the difficulty is calling the bottom to the economic, to the commodity cycle. And by that I mean companies that are already experiencing a lot of pain. We need to be confident that they can survive should that persist for a number of years. Yeah. And that's why I say it's possibly a medium to long-term play. But a lot of the big names do have robust balance sheets, and I have no doubt will be around for a number of years, in which case present a great opportunity.
Stephen, that's where we have to leave it. Thank you very much for your insights.
Thank you.
We're going to a short break. Standard Bank web traders Sandesh Ganassi joins us on the other side to discuss the latest corporate earnings out of the US.